The Checkpoints is presented by pharmaceutical company GM Pharma. The international credit rating agency Moody's has maintained Georgia's sovereign rating at Ba2, but downgraded its outlook from stable to negative. Moody's report states that Georgia's institutional and governance stability is under threat. Ongoing political changes, including the adoption of the Foreign Influence Transparency Law in May 2024 and delays in the EU accession process, significantly increase uncertainty. Additionally, Moody's highlights concerns about the temporary suspension of Georgia's International Monetary Fund program and changes in the central bank's leadership. These developments raise questions about the national bank's governance policies, which, according to Moody's, weaken Georgia's institutional and governance structures. According to the international rating agency S&P Global, Georgia's banking sector remains stable and competitive in the region through 2025. The report emphasized that Georgia continues to hold a leading position in banking regulation within the region. However, concerns are raised that ongoing political developments and the country's drift from democratic principles may impact the independence of the National Bank of Georgia. We still consider banking regulation and supervision in Georgia to be the most developed in the region. However, the departure from democratic principles may influence banking sector regulation and the independence of the national bank, states S&P Global. In the first quarter of 2025, the business climate deteriorated year over year, according to the BAG index published by the Business Association of Georgia. In quarter the first 2025, the BAG Business Climate Index stood at 31.9 points, including 13.9 points for the current business conditions and 51.5 points for the business expectations. Compared to quarter 4 2024, the BAG Business Climate Index declined by 3.3 points. During this period, survived companies' assessments of the current situation deteriorated by 14.7 points, while the 6 months outlook improved by 9.6 points. The total volume of loans issued by commercial banks in Georgia decreased by 108.11 million Georgian lari in February 2025 compared to the previous months, reaching 62.58 billion Georgian lari by the end of the month. The annual growth of loans, excluding exchange rate effects, was 17.43%. By the end of February 2025, the total volume of deposits in Georgia banking sector amounted 58 billion Georgian lari, marking a decrease of around 1 billion Georgian lari compared to the previous months. The annual growth of deposits, excluding exchange rate effects, stood at 11.78%. According to the National Bank of Georgia statistics, Georgian banks issued a total 3,499 mortgage loans in February 2025, with a total value of 328 million Georgian lari. The number of new mortgage loans decreased by 18.5% compared to the same period last year, while the total mortgage loan portfolio increased by 2%. This indicates that the banks are issuing fewer mortgages than last year, but the average mortgage loan size has increased. The Checkpoints is presented by pharmaceutical company GM Pharma.